Chris, thank you very much for joining us today. How are things in Toronto?
Always a pleasure, James. Yeah, things are good. It's like 24 degrees, hot and sunny. The water's tropical. Although there is a huge storm coming. They're talking 4 centimeter hail, which is like, 2.5 inches, 3 inch hail ball. So it's empty the garage, get the nice car in.
Oh my God, this is crazy. But I'll tell you, here we are. We're almost in the month of May, and I love the month of May. I don't know about you, but there's so much to celebrate. We got Warren Buffett's AGM is coming up in Omaha, Nebraska. I don't know if you've ever gone to that. If you haven't, I would suggest you go. It's a great time. We got the Kentucky Derby coming up. We got Cinco de Mayo. There's so much to celebrate in the month of May. And then we got a long weekend coming up in a few weeks. It's Victoria Day in Canada, and we got the Memorial Day weekend in the US. So much to
Even
look
my
forward to
birthday,
in the
so
month of
it's a
May.
good month.
So the last time we spoke, believe it or not, it was in March, and so much has happened since then. Of course, we just had an election in Canada. We got to talk about that later. But before we do that, I want to look at the US. We've had a number of companies already report. We've seen a lot of new economic data out in the last few weeks, and the numbers have been really mixed. And I almost wonder if the pain is going to come more in Q2. So later in July, when we start seeing Q2 numbers and just everything associated with the trade wars, there's still so much uncertainty. I read recently the consumer outlook in the US is the lowest it's been since 2011. Okay, so there's a lot of uncertainty, a lot of negative with the consumers.
Mhm.
UPS is laying off 20,000 workers because they're expecting fewer shipments because just aren't buying online like they were buying. All the
Yep.
airlines, Delta, American, Southwest, have all come out with profit warnings saying people are not flying businesses aren't flying business class because of the uncertainty. People aren't taking vacations because they don't know what's going on in the economy. The Port of LA recently came out and said their shipping sales or shipping volumes are going to be down 35%. Just think about that. And another interesting stat I saw was Louis Vuitton. They came out with their numbers recently. A big pullback in the US and also China. Those are the two largest markets. So not even the rich are buying. So
Mm.
having said all that, I want to get your views on the US market. And why don't we take a look at the S&P 500 to begin with, and then we can take it from there.
Sure. Yeah. Yeah. You covered a lot there. I mean, you and I think, talked about this back in March, and even before that, even on another call, how the price of oil, when it breaks below that $65, that was going to be a fairly significant warning sign. I think that the economy is weakening, and price, which is what I focus on, technical analysis, usually moves first, and then the economic data comes later. As you said, we're probably, the second quarter of this year is probably when we're going to see earnings actually really start to slump, and a lot of downgrades and things like that. And the stock market has already kind of fallen off a cliff, I think, anticipating all this. The tariffs definitely are wreaking havoc, kind of ripple through the whole world, and and it's definitely hurting the price. Now, we've seen a very big correction in the stock market. We do have a series of lower highs, we have a series of lower lows. So we're definitely in a downtrend. The big question right now is, do we get a dead cat bounce that lasts, potentially several weeks or several months? Meaning, and a dead cat bounce means, is this market going to push higher and work itself up, and really get a lot more people excited that the bottom is in? Because right now, I have found everybody seems to be thinking the bottom is in. They think the market's going a whole lot higher. The spook and the fear and all that from tariffs has now been done. But I believe tariffs have actually kind of, made the economy turn a corner from a bullish economy to more so a bearish economy. So I believe we're coming into some type of big pause in the market, or some type of bounce. And then I think we're going to see a big sell off later this year. And we're going to go into a much bigger correction, like a stage 4 financial reset. And the charts and a lot of things, including gold and even the dollar, a lot of things are kind of aligning with everything that you just said. It seems like it's all bad news to me, and the market's already been going down for a few months, and so that's kind of how it works. The next round of our earnings and all that stuff, I think, are going to be definitely weaker than I think a lot of people anticipate.
And we can't forget 70% of the US economy is based on the consumer. So if the consumer is not spending,
Yeah.
the ripple effect has drastic effects on the overall economy and also the
Yeah.
stock market. But
And
we're looking
that,
at the S&P right now.
yeah.
It peaked in February at 60, just over 6,100, went down all the way to 4,900, so down 20%. It's had a nice rebound. So where are we at now? 5,500?
Yeah, we're right about 55.50, somewhere in here. And the big
So
question is like where's this market going from here? There's a whole lot of mixed signals. If we look at the market from a shorter term perspective, the trend was down previously. And this 30-minute chart of the SP 500, it's telling us where the momentum is. So it went from red, which is bearish, to orange, which is neutral, to green, which is bullish, back to red. It's all over the place. And when there's uncertainty and kind of trends are flipping and flopping, you really don't want to mess with the market until things are more certain. But based on this chart pattern, we can get an idea of where this market might run to using Fibonacci extension. Oops, let me just grab this tool. So the market right now is at a really critical turning point. And just based on this rally, this pullback, we're right now kind of flirting with this 61.8%, which is the golden ratio. It is pointing to we should see the market rally up about another 5%. Now, this is the SP 500. The NASDAQ will probably be a little bit more percentage wise, but this is going to bring us right up into 100% measured move. It's going to bring us up to a previous high. And really, if we just draw a line across here, it is a fairly significant pivot point. Either price was trading above it or it's trading below it. And that's where it's saying momentum should stall out. So there is potential for the markets to go a little bit higher. And maybe it'll push a little bit deeper into resistance, but I am expecting this to be more so a bear market rally, meaning this is a bounce or a dead cat bounce that eventually starts to roll over and then picks up speed, and we go a lot lower after that. So that is the big question. And the market's trying to figure out right now is it going to get rejected right here, which is also a very significant resistance area?
right,
The
and I was
six,
going to ask you about that because that's at, call it 5,600. We're already up 12% from the lows.
yep.
Do you think we hit resistance right here at the 5,600 level on the S&P?
Yeah, I mean, we've definitely hit resistance, both from previous pivot lows and also Fibonacci is saying, hey, the 618 is the first level of resistance. If it's going to get rejected, this will probably be the first level. So it is trying to eat through that right now. And that's why we generally see the market pause at the 618 is because it's run out of steam. There's usually sellers coming in. And there's just kind of a change of shares. Shares are going from the hands of nervous, weak investors and going into people who are more comfortable to hold it. So I don't know if it's going to get rejected. I feel like it's going to want to bounce and move higher here and try to test that 58.25 level, the previous high. So that's what we just have to kind of wait and see. And the Magnificent Seven are underperforming. They're struggling. But if the market does move up here, we're going to see everything probably move up and start to move higher. And there's going to be I think it's going to trigger a lot of complacency. As you and I have shared this chart before, this is kind of the emotions of the market participants. And I believe, this dead cat bounce in the market is really just going to get people bullish and moving into the markets. And then they don't realize it when it rolls over, we're going into a stage 4 decline, which you and I have covered here. There's 4 stages to a market. Stage 4 is, 2008 tech bubble, all of that. And what's really interesting right now, James, is we're seeing people moving into the market. They believe the downside is done. Advisors across the board seem to be saying, buy, accumulate. The market this is a good price to buy stocks. And there was this really interesting chart here. This shows that traders plowed $6.6 billion into leveraged long ETFs in just 1 week. Now, if we take a look over the last several weeks, money is just pushing into the leveraged ETFs. Everyone seems to think the markets have bottomed, and now they're buying leverage, anticipating the next bull market. They want to make a fortune this time around. And when everybody's trying to pick a bottom, generally the bottom is not in. It's not in until everybody's given up on the market. It's not loading up and betting on higher pricing. So, this is one of those little indicators that just give us a bit of insight of the mindset of the market. And I, recently shared a video and I was talking about how I believe, this is just a bounce and we're going to go a whole lot lower. And I actually got more pushback than normal of everybody saying, no, 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 we've just had the washout. We've had the volatility and the markets are going higher. And this indicates that this is a perfect. So I believe the bottom pickers are going to get hurt again when we have another leg down. They might be right for a few weeks as the market goes higher, but once it rolls over, we've got to be very, very cautious of that because I think we're
And
going to.
this is one of the issues too with investors these days, because if depending on when you started investing, let's just say it was 2010, 2011, you've only experienced up markets. You've never seen a bear market. You never seen a real pullback, right?
Well,
And
yeah.
maybe this time is going to be different. But okay, so once again on the S&P, you see potential resistance at either the 5,600 level, which is we're almost there, or
Yeah.
the 5,800 level. So let's
Mhm.
just say, depending on what level, you meet with resistance and then it starts rolling over again. Where does it go? Do we take out that previous low of 4,900?
Yeah, I think the first real major measured move using a Fibonacci retracement tool, we go to the low from 2022, we go up to the high, and this will tell us the sweet spot for where the market could pull back. So it already has pulled back that 38 to 50% retracement on there. So it has done a signature kind of perfect correction, and now it's having the bounce. Now, if we go back to the 2020 bear market level, and we do the same thing from where this last really kind of this whole pattern has played out. We had a bull market, we had a big pause, and we had the second half of that move. As you and I shared this last time, if we go from the COVID lows to the rally in 2022, the high and the low, if we carry that forward, you can see the stock market came right up to this 100% measured move and put in a top. So now what we do is we go to where this market has put in the significant low in 2020, and we can find out how far down this could retrace. There's a lot of lines on here, but overall, we should be looking for the SP 500 to drop down to this range, which is hard to see, but it's roughly 4,165 to about 4,630. So there, I mean, that's obviously a pretty precipitous fall from where it is right now. That's roughly 16 to 24% drop from where that's just the next leg down. I believe we could actually be coming back down into the high 2000s if the worst case scenario kind of unfolds and we go into a precipitous sell-off and the whole world comes kind of to more of a grinding halt, a financial reset, a stage four. So that's what
And
people need to be aware of.
just to summarize, you envision we're not going to have a crash like we've seen before where we were down 20, 25, 30% in a relatively short period of time like we did during COVID. It's going to be more like the early 2000s when from the year 2000 to 2002, the S&P lost 50% of its value. So it's going to be a slow, steady move
I
down.
I don't know how fast it's going to be. That's the one thing that's really hard to gauge. Does it take 3 months, 2 months? Does it take 24 months? Like 2000 tech bubble was like a 3 year never-ending bear market. The financial crisis really all happened. A lot of it happened in just a handful of months, 7, 8 months. So I don't know. And there's not a ton of liquidity in the market. And when the market starts to fall, people react, I think, a lot faster now. So I'm worried it could be a fairly sharp correction. And so I'm not sure on the time frame. The key is knowing we're in a downtrend, knowing that we've started a bear market based on my technical analysis. And the big question here is, how far down is it going to go? And to make sure you don't hold positions that lose value as this market goes down. There's ways to profit from a falling market, and that's what we want to do going forward.
So Chris, why don't we take a look at the NASDAQ 100 now? Uh, Very similar to the S&P, but the makeup of this index is a little bit different, more riskier
Yeah.
companies. So let's take a look at that. And just to reiterate or summarize what's happened to the NASDAQ 100, it peaked in December the 16th at 20,173, went down to 17,000, which is a decline of 22%. Now, where are we now? It's 19,400.
Yeah. So it pretty much has the same chart pattern as the SP 500. The NASDAQ and SP 500 move together. When there's a major correction, they both sell off. Just the NASDAQ falls percentage wise more than the other. This was a bigger percentage correction, and it also has bigger rallies. It's just more volatile, but they do the same thing. When there's a big bounce, they both bounce together. When there's a sell-off, they both crash together. It's just the NASDAQ has got that more volatility. It does have a different makeup. Obviously, it's very heavy with the MAGs, the Magnificent Seven, which if we look at the mags as a basket of all of the stocks here, the Magnificent Seven look, they have dramatically underperformed. They've put in what could be some massive head and shoulders pattern. I am expecting the stock market to potentially have a bit of a bounce and move higher before it starts to roll over. This will create a neckline, and this will be a head and shoulders pattern, which is a major topping pattern, which points to a big unwinding in the Magnificent Seven. And so, I mean, a lot of people push back on this saying, there's no way, like I believe Tesla price is going to get cut in half. I think Nvidia price is going to get cut in half from where it is right now. And people are like, there's no way, the companies are way too strong for that. Well, I mean, there was a little clip with Bezos talking about back in 2000, Amazon was trading at $100 a share. It fell all the way to $6 a share. And he says the fundamentals and the company and the growth it was going through were unbelievably strong. Yet the company fell like 94%. So this is one thing that people need to understand is the stock price really doesn't have anything to do with the company. The company could do exceptionally well and drop 95%. What the stock price represents is what people think and feel of the company, and also their general feel of their investments and if they're scared or not. So, and this is how I blew up one of my accounts during the tech bubble. I was investing in companies that had very strong fundamentals. They had quarterly growth, quarter after quarter. These were high momentum, strong stocks. And during the tech bubble, they got cut in half, then they got cut in half again. And I blew up my account holding the best, fastest growing stocks. But it was because we were in a stage 4 bear market. And that's what's going to potentially happen again here is these huge, expensive brand name stocks that have a ton of value, their stock price is probably going to get slaughtered, and it's going to become an awesome opportunity.
So let's check out some of those stocks. You mentioned Tesla. It got as high as 480 in late Q4. It fell down to 220. Massive pullback, down 53%. Now we're at 285. Where do you see that going?
Yeah, I
Higher or
mean,
lower?
I think it might have a bounce and go a little bit higher. I think the stock market is ready for that 5% bounce, which means Tesla could bounce potentially 5, 10, 20%. So, let's just say it bounces up a little bit, kind of into this little cluster and this cluster. Say it hits resistance up into this area, which is about 345. If we do get a nice bounce, that's telling us that Tesla could actually drop all the way down to $70 during the next major wave to the downside. Now, obviously, that is a huge haircut from where it is. So there is potential that all of this could happen. And this is what will make it a financial crisis where companies lose billions and trillions like of total value. It's so fast, it'll make people's head spin. It'll most likely rebound if it gets down to those levels. But the charts look very, very bearish. And people know now that once the market starts to sell off, people aren't going to want to hold. And even the passive investors with advisors, when they actually start to feel like we're in a bear market, which they don't yet, they're going to say, get me out. And it's going to create a huge wave of selling across the board. So I think Tesla's going to get hit very hard. Obviously, that's a very extreme move. We could probably use some different levels, but I definitely feel like it's going to get cut in half. I could probably see it down at 150 very easily over the next several months.
So the
you probably want to
poster
look
child,
at Nvidia as well.
yeah, let's take a look at Nvidia because that's the poster child for this bull market. And it peaked at $150, went down to 95, a drop of 36%. It's had a nice rally off its lows. Where do you see that going?
Yeah, it has a similar type of pattern. It's got a shoulder. I think it might bounce up and put in a little bit of another shoulder here. And we've got a neckline. So I do feel like it's going to move higher. And then I think we're going to eventually see this have a bigger correction. And, I don't know where it's going to drop to the downside. We kind of need a bit more of a bear flag to form here. But overall, I talked about this with an investor. This was like 3 or 4 months ago, saying I think it's going to fall to about $66 a share. Or it was 63. I can't remember what it was. Either way, it's a long way to go. And when I said that publicly once, and I got tons of pushback, which to me is confirmation that, okay, everybody's buying and holding and they believe it's going higher, which typically means the market's going to want to go the opposite way until they spook and they panic out. So everybody's really bullish on Nvidia still. Everybody's bullish on the stock market. As I just showed you with the 2x leveraged ETFs, everybody's buying leverage. They're expecting this to go up. And people are bullish on gold. You don't want to say anything bad about gold, and you don't want to say anything bullish about the dollar, because everyone right now has extreme opinions. Gold's the place to be. The dollar is garbage, and it's going lower, and gold's going higher. So when we have these extreme sentiments, coupled with the price action that they have, to me, it says the exact opposite. But it's not what people want to hear or see.
Okay, one more name before we move on. I want to look at MicroStrategy, MSTR. Once again, a lot of people look at this stock for as a proxy to Bitcoin. It peaked at 475 in Q4. It had a massive move. It went down all the way to 235. Call it the drop of 50%. Now we're at the 380 level. Where do you see this one going?
Yeah, I think Bitcoin has got potential to actually have a breakout and run. So if this is tied to Bitcoin, which it is, we're probably going to see this want to push higher. It might want to push up to the 445 and put in a kind of a significant double top. It's in a strong uptrend right now. If we actually take a quick look at Bitcoin, let me just pull that up. You can see Bitcoin here has got this chart pattern. It's primed and ready to have another leg up, right up to this upper end, 108, 109. So it has potential. Of course, if this does take off, we'll see MicroStrategy, anything related to kind of crypto slash Bitcoin
It
itself. I
is
think,
hanging in very well, I have to admit, in the last couple of weeks.
yeah. So I'm kind of bullish on Bitcoin and things related to it. The monthly chart to me is what's really exciting. And if Bitcoin moves, we'll probably see MicroStrategy move and all of that. But what I like is we had a big bull flag pattern here, and we ended up getting long here. We actually got out at 108 right up here. Now it's building another bull flag pattern. Now it's not the sexiest bull flag pattern, but it is building it. And if we get up to this level over here, very similar to I drew over here, I would think there'll be a shift, and then we could see a very big pop. And that tells us Bitcoin has the potential to rally to about 135,000 per coin. So there is quite a bit of upside potential. It's building a launch pad. If this moves up, then we'll probably see like MicroStrategy and things related to Bitcoin probably buck the trend, because the stock market might end up falling while this actually takes off, because Bitcoin has been holding up as a alternate investment, which it is, but it's been moving up as a defensive play recently.
So
So yeah.
I'm surprised you're bullish on Bitcoin because it is a risk on trade. It's highly correlated to the NASDAQ 100. It's close to a correlation of one.
Yeah.
And yet you're calling for a significant pullback in the NASDAQ, but you see Bitcoin going higher. How do you reconcile that?
Yeah, well, I focused on the charts, not so much on what I think or feel. So, I mean, and Bitcoin has moved with the Nasdaq quite a bit, but it's not in step every time. This is the thing with Bitcoin. This is the same with gold miners. You don't know if it's going to move with the stock market or not. It decouples at times, and you never know when it's going to decouple, which makes them both very difficult to trade, especially if you're expecting the Nasdaq to go down, you think Bitcoin's going to go down. Um, so there's a wild card with an extra wild card with Bitcoin, and an extra wild card with trading miners. I like to follow the price charts. I like the monthly price chart because it has a huge amount of momentum behind it. Like Bitcoin to me is like a trade. I want to see a huge pattern that if it starts to unfold, I can jump in, and that pattern should last several weeks, and it should have a lot of runway for me to be able to lock in gains and hit a decent target. I don't really mess with Bitcoin with the short-term daily charts and all that stuff. But when there's a huge move in something that the whole world follows, it's headline news, and when it starts to run, everybody pumps it and hypes it up even more and creates that big leg higher, which is exactly what we had over here for 3 months. I believe that scenario can happen again. And it's in a way, it's kind of like you might as well play that FOMO herd mentality move when everybody piles in and drives it up. And I mean, it's in a strong uptrend. There's no doubt about it. So I like Bitcoin because of that. It's a very FOMO driven move that when it starts to run, everybody piles in and drives it higher. And I like to take advantage of it. It's what we did last time, and we might do it again if we get the proper setup.
All right, so let's take a look at gold now. Gold's been performing very well. It was up 25% in 2024. It's up 25% already in 2025.
Mhm. Yeah, so I mean, gold's still in a very strong uptrend. It has hit a couple different targets when we look at the overall chart. So more or less last week, about a week and a half ago, it hit our upside target. So we had this high momentum move. A lot of things really took off, including gold miners, and it gave us a signal saying, okay, this wasn't a significant move. And just using Fibonacci extension, it shows where gold should run to. And we hit that level, which was 3,500, and now it's rejecting itself. And right now, it actually has a bearish price action. It hit 100% measured move. It's run out of short-term steam or power, and now it's forming a little bear flag, which actually points to about a 5%, 4.5%, 5% drop to the downside, which is perfectly fine because gold will then potentially build a launch pad before going higher. Now, what's really interesting with gold, and as I put these charts together for you, take a look at. I'm gonna have to pull up. Let me just pull up the SPY real quick here. If we take a look at the SPY, give me one sec. Let me find this chart. There we go. Let's just go way back in time with gold, and we're going to go to the SP 500 in the gold chart. And this is what's really, really interesting here is if we take a look at, I'll just zoom in a bit more. If we take a look at the gold chart, which is the yellow line, this yellow line is gold. And the candlestick pattern is the SP 500. So we've seen gold shoot higher. We've seen the SP 500 go into this multi-wave correction. And this is what is concerning for people is when gold takes off and dramatically outperforms, that is usually a sign that there's global problems, there's some massive market corrections coming. Our overall cycle of the market actually shows that when gold takes off, we're usually at a stock market top. And so now everybody's super bullish on gold. It's hit all of our targets to the upside. And what's really interesting is this chart here is, what happened in 2006, 2007, 2008. If I was to pull up the chart of where we are right now, and you take a look at it, we have a very, very similar type of setup where gold has taken off and crossed over where it's dramatically outperformed the SP 500. The SP 500 has had the same correction. This is what happens after this scenario in 2008. We get a dead cat bounce. We get a push higher over time. Gold eventually tops out. And then eventually we see the stock market go into this huge precipitous fall. That was a 57% pullback in the SP 500. It's hard to see the lines behind here. And gold pulled back 34%. And so we're like right at the cusp here. Gold might push a little bit higher. The stock market might push a little bit higher. But overall, this is pointing to like a huge market correction, a major turning point in the globe. Gold to me is a global barometer. And what happened in 2008, while we're not in the same situation, the price action is almost identical. And it's not about, every bear market that comes is for a different reason. Every stage 4 market financial crisis is from a different situation, but price action is still the same. Things run out of momentum. People get nervous. They move into gold. Then the kind of economy falls apart for whatever reason. It doesn't matter. When people get scared, they sell. That is always the same. And that's where we're moving into is this very similar setup that we saw in 2008. And so we have very little upside left in gold, I believe, and we have a little bit of upside in the stock market before we go off a huge waterfall sell-off. So things are unfolding. We saw crude oil break down already like a month ago. That is an early warning sign the economy is coming to a grinding halt. And now, as you said, UPS laying off 20,000 people, all this stuff is coming to a grinding halt. The price tells us what's happening before the news and before the data, economic data and fundamental data. So that's what I find is really, really eye-opening as the scenario we're in. It doesn't matter what you think or feel or why things are doing it, but the momentum for the economy is slowing. Investors are moving to the assets or out of the assets that they don't want to hold. And I believe we're in a really major turning point here.
Chris, I just want to clarify. So gold, you said gold peaked at $3,500.
Yep.
Now you think it's going lower.
I think we're right here. We're very similar to it's going to start to sell off, and it feels like a crowded play. And check this out. Like if we actually take a look at, if I throw the US dollar in here, let's throw the dollar in both of these. If I go over here, we throw the dollar in and we go and we look at this. Let's go right back to where I believe we are right now, where we have the stock market has gone into a correction, which is what we have over here. I know these charts are hard on the eyeballs.
So the US dollar is the white line.
The US dollar is the white line. Gold screamed higher in 2008. Gold has screamed higher now in 2025. The dollar has plummeted. Nobody wanted the dollar. It was completely crashing. A falling dollar helps lift the price of gold in US dollar currency. Well, the US dollar has completely plummeted. Nobody wants it. Everybody says the dollar's toast. Gold's the place to be. And everybody thinks there's a new bull market starting in stocks. And that's what happened right over here. I remember living through this, and we have almost an identical setup. And the sentiment for all of these are super extreme. Nobody wants to hear that gold's top. Nobody wants to hear the dollar's bottomed, it seems. And people don't believe we're going into a bigger correction in the stock market. That's why they're buying leverage at betting on a rally. And so the scenario is very similar. When you compare them, they don't have to be the identical, and it's never going to be the same financial situation. A lot of people are saying, well, this time is different. Of course it is. It's always different. And gold may take off. Maybe it doesn't ever look back. But based on analysis and based on what happens when there's panic selling, the scenarios here are, frighteningly similar. And the same scenarios unfolding. The economic data keeps coming out that is becoming weaker and weaker. And it's just a matter of time before we see the downgrades and I think
So why don't
GDP
we take a
numbers.
look? Why don't we take a look at silver now? Because
Sure.
even though gold has had a massive move here in 2024 and 25, silver is lagging. I think it's up around 10% on the year, which is okay, given
Mhm.
the volatility we've seen, but it's not moving like many people thought it would.
Yeah, silver's struggling. I mean, it took the elevator down. It really got wiped out with that last wave of selling. I don't know what this percentage was. It was 22% pullback in a blink of an eye. Sorry, I got a flag here. Um, Gold pulled back like 7 or 8%. And what happened during this time was a bear market wave of selling. It was true fear. And what happens in a bear market? That happens all the time. And so as you can see, gold pulled back 8%, silver pulled back 22%. So just imagine if we're in a bear market for 8 months and we have multiple waves to the downside, how much these are going to get hit. Silver is really, it's had a just kind of a dead cat bounce. It's kind of percentage wise, it's been nice, but overall, it's just bounced up and it's not making new highs. It might want to push a little bit higher, but as soon as there's another bout of selling in the stock market and a little bit of fear, we're going to see this sell off here. Jeez.
So you don't see silver pushing through 35 bucks and taking off to higher levels?
I don't. If it does, I think it'll be short-lived. It could be a pop and a squeeze, and everybody piles in, and it could be more like a head fake where it breaks out and reverses. I mean, if you take a look at these levels here, each time it broke, it created a big wave of people to hop in and play the breakout, and then it sold off. We ended up poking to a nominal new high right over here, and then it just got hammered again. And we got lots of volume to the downside. So if it does make a new high, it's more like lock in some gains, pocket some profits, and then, be prepared. Another bout of selling could kick in into the silver market.
And before we move on, Chris, I should let our viewers know that Bloor Street Capital, just did a virtual silver conference last week. It's 3 hours of free content, anything and everything you want to know about silver. And we had a number of silver companies on there, producers, developers, explorers, as well as buy-side people from Sprott who can give you views on where they think silver's going. I would suggest or encourage our viewers to check it out. I'm going to have a link below in the show notes. Chris, why don't we take a look at oil now? Because you mentioned this earlier, but oil is weakening. It's quite
Mhm.
often seen as a barometer for the overall economy, the global economy. And we were trading above 70 bucks not too many months ago, and now here we are at 60. I guess my question to you is, do you see it breaking 60? Does it head down to 55 or 50 bucks a barrel?
Yeah, so oil breaking down, it was definitely a fairly clean break, and that was what I was hoping to see was something very, very strong. This is the weekly chart of oil, and it closed weekly well below the support level line. It's had a little bit of a bounce up. It's starting to roll over and sell off again. There's a couple ways we can gauge where this is. The most conservative and the most um, uh, kind of pinpoint price action of where it could drop is about 47 is where it could go over the next couple of months. It could wipe out very easily. And I know that's a huge, huge price correction, but the reality is it has traded at or below 47 a lot. It's not like it's anything life changing. We know it can go negative, which is a bit different of a scenario of why that happened. But overall, I believe we could see it go down to about $47 per barrel. And then from there, we're probably going to get a pretty significant bounce. But that's what this current momentum is telling us. And the energy stocks are going to get hit hard. There's not a whole lot of profit in oil when you drop down to about $47 a barrel. So it's going to be a game changer in terms of energy stocks. And it'll definitely pull the markets down, falling
And
oil. It
I'm
does
sorry,
have
where do you
perks,
see the price of oil going?
47.
47 bucks. Okay.
Yeah.
So that's a significant pullback.
Yeah.
That's a
And
great overview of what's happening in the US markets, the S&P, the NASDAQ. We looked at gold, silver, oil. Why don't we take a look at the Canadian economy? You and I are both based in Toronto. So uh, for our US viewers, we just had a federal election here. The Liberals won again. They did not win a majority, and they won 168 seats compared to 160 in the 2021 election. So you need 172 to get a majority. If you got a majority, then you can pretty well do anything and everything you want. They didn't get it. The Conservatives, they won 144 seats compared to 119 in the last election. So they did significantly better, but they did not win as many people were hoping, including myself. The NDP, the only positive I see in this election, Chris, is that the NDP pretty well got wiped out. Uh, they had 25 seats in the last election. They got reduced down to seven seats in this election. So they lost official party status, which is I see as a big plus. Their leader also resigned. And so let's talk about what this means for the Canadian economy. And just for the sake of provide a little more context for our US viewers, the US or the Canadian economy has been weakening for quite a few quarters now due to the policies put forth by the Liberal Party over the last 10 years. And when we take a look at the TSX, what are your views? Where do you see it going?
yeah, I mean, I think there's a lot of things wrong with Canada that probably could be adjusted. I don't know if the Liberal Party is going to focus on it, but I mean, we are such a resource-rich country. Oil, natural gas, uranium, timber. I mean, it's crazy, but we don't actually like really sell a whole lot of it. We don't open the market up, and they just want to do other things. So it is definitely hurting us. We're seeing the stock market definitely struggle. The Canadian market, it's put in a major double top. We have a series of lower highs. Let me just grab this tool. Series of lower highs. We have a series of lower lows. It has had a very nice rebound. And I think that is because typically we see resource stocks and more so gold, precious metals do well in this particular market environment, which is just before I think the stock market, the economy around really the economies around the world kind of fall off a cliff and all have a reset. So we've had a very strong rebound, precious metal driven, I think. But I do feel like it will eventually stall out, and all of these indices will pretty much move together. When you overlay all the world indices over top of each other and you look at the big picture view, they're all in bull and bear markets pretty much at the same time. And so once we do see that turnaround, I think the Canadian economy is going to struggle. And I think we'll do very well. We'll probably come out of the recession, hopefully maybe before the U.S. in terms of the stock pricing, because we're going to be resource heavy, and we'll see the precious metal space and potentially oil and energy stocks come to life. They're going to get beat up really hard, I think, during this process, but they'll probably come to life first. So overall, I mean, I'm bearish on stocks in general. I don't really care what country they're in. I don't really want to be holding stocks at the moment, long term, because I think they're going to be a lot lower. But Canada is holding up fairly well, near the highs, simply because precious metals and we are resource heavy, and resources come into favor right now versus big tech is, struggling and pulling the US indices down.
Yeah, that can change. Once again, just for the sake of our viewers, I believe 30% of our economy is export focused. So we are an export nation. That's how we make our money. That's how what drives our economy. And if we're not exporting, if we enter into a real trade war, this economy can go down.
Yeah.
It can go down pretty fast. So why don't we take a look at the Canadian banks, beginning with Royal Bank? It's the largest company in Canada, and this is probably a good proxy for what's happening with the Canadian economy.
Yeah, I mean, RBC, the RBC Bank has definitely been falling out of favor. I'm not a big fan of the banking space. I think they'll get hit pretty hard. I think this is the RBC shares. If we take a look at it, I mean, they've been hit pretty hard. They're recovering up under the 150-day moving average, but overall, I think we're going to get into difficult times, and we're going to seeing credit card delinquencies rise, mortgages defaults are going to start to kick in. The banks are the ones who hold pretty much all of that stuff. So I'm not a huge fan. RBC's been doing well; it's been recovering, but overall, it's stuck under resistance. Pretty much every sector and major asset has bounced up. It's very similar to even the Bitcoin chart. Bitcoin broke down. Everything is at a turning point where we're going to have one more push back up. Stocks like this could go up and put in a double top over here. But overall, I'm not a big fan of the banking system. I just don't trust banks. I mean, for banks to go, I'm still really upset how banks go bankrupt. They're supposed to protect our money and they just gamble it with leverage and lose it. So I've always had this thing against banks ever since they kind of all blew up. If we look at TD's trading up at resistance. Naturally, sellers are going to be lurking. I think most of the upside is done for TD. And if we look at BMO, again, everything's had a bounce with the stock market recently. BMO is stuck under resistance as well and looking a little more sick in terms of where it's probably going to sell down to later. So all stock prices almost have the same chart pattern. They've all have multi lower highs and lower lows. They've all had a strong rebound. And the question is, can they all break through this first level of resistance and move a bit higher? Or are they going to get rejected and we have another leg down before we get a bigger bounce? So I'm pretty weary of the Canadian market in general.
When I listen to everything you say, Chris, I got to wonder, like, things sound pretty negative to me. We talked about a number of companies that already came out and they've cut their earnings, cut their guidance for the year. And then when I look at Warren Buffett, for example, okay, the smartest investor in the world, he's had interviews in the last couple of months. He's been asked what he thinks of the economy, what he thinks of the trade wars, and what does it all mean to his investment style. He refuses to answer the question. It's going to be interesting to see if he's got any comments in the AGM that's going on in the coming next weekend. But if you look at his actions, he's been selling down all his positions. He took his position in Apple down significantly. He's been selling a lot of the U.S. banks. He's raising cash. I believe he's sitting on 28 to 30% in cash. He's now the single largest shareholder or owner of T-bills.
Mm-hmm.
Not even Jay Powell knows what's going on in this economy. He has said that they're just going to sit back and wait. He said there's so much uncertainty. They don't know how things are going to play out. I especially enjoy this back and forth that's going on between the president and Jay Powell. That's going to be interesting to see. So we got a Fed meeting coming up next week. We'll hear more commentary on what the Fed and other members of the Fed have to say about the economy. And then when you look at a lot of other investors, Jamie Dimon, for example, has expressed a lot of concern about what's happening right now with the trade wars and the impact on the U.S. economy and the global economy. Larry Fink, Bill Ackman, all of these guys are standing up and speaking out.
Mm-hmm.
Well, how do you think investors should react? How should they be positioning themselves with all this uncertainty?
Well, I mean, I think Buffett's kind of nailed it. I mean, we've moved to cash. We're in a bear market phase. Sometimes the best play is cash. Cash is a position. People don't see it as one, but I'll tell you, if you have a position that makes you interested and goes and build your account versus holding stuff that's falling in value, I think you'd say a position in cash is a pretty good play. And so that's where we've been from a long-term investor standpoint. We're in cash. Short-term trader, we're in cash because there's a lot of mixed signals in this market right now. And I mean, that is the easiest, it's not the best way, but it's the easiest way to avoid a market crash there's no problem buying into something. Say everybody's wrong and they're like the markets do start another bull market. You just get back in. So you missed out on a little bit of upside. It's not about making maximum amount from the markets. It's about protecting your capital first. And then when things firm up and there's a good probability it's going higher, then you move back into the new trend. What you don't want to do is hold on to it because you think you need to be in positions and then lose 20 to 50% of your wealth, which if you're 50 or 55 years old, there goes like 10, 20 years of hard work and savings all out the window, gone. In a couple of months, it can happen, as we've already seen. So protect your capital. Cash is king. If you have access to a strategy that allows you to move to a different asset or rotate through assets or play inverse ETFs to profit from falling market, then you can make money. And as things are falling apart and have even more to invest when we start a new bull market, which is, you know, almost priceless. It's unbelievable when you have, you know, tons of dry gunpowder and everything you buy after a financial crisis is a steal. And there's years and decades of upside potential, huge dividends. So yeah, I mean, cash or have a strategy to take advantage of it. And that's what I focus on. Is I tell you, or I tell investors when to move to cash. I tell you, here's how we can take advantage of these moves to the upside, to the downside, and that's just the way we are. I want to be efficient. If something's falling, I want to avoid it, or I want to benefit from it.
So let's just summarize a few of the main points that you have said. First of all, you expect more downside pressure on the S&P and the NASDAQ. You think the S&P might bounce to 5,600. We're not too far away from there, or 5,800. And then we're going to meet with resistance and we're going to head back lower. And we're going to take out the previous low, which was 4,900. And you think it could go down, did you say 4,400 on the S&P?
I don't remember what it was, but yeah, way down there.
Okay.
About
And then
24% to the downside.
And then in terms of gold, you think gold has topped out here at the 3,500 level and it's under pressure, or could be under, or it could be at risk to going lower.
Yep.
Silver, same sort of thing. You're not bullish. You don't think it's going to rip through 35 bucks. That can
Yeah,
also go
I would
lower.
ignore silver for now. Yep.
Oil, you think oil's under pressure here. It's going to break $60 on the downside. And I think you said your downside risk or downside level was 44 or 45.
40, 47.
Okay.
Yep.
And the one thing that you did like though was Bitcoin. You think Bitcoin could go significantly higher from these levels?
Yeah, we need the setup to unfold, and then it could be a great trade. And just to go back to gold, because people jump the gun here. I'm not saying gold has topped. I'm saying gold is in a raging bull market. You don't short something in a raging bull market. We needed to put in a top and confirm it's starting a new downtrend before you kind of want to get out of it. So people who are long it, you know, it still might have more room to go. But based on the chart patterns, it has very little upside left now, just based on the charts I shared that compare. We really only have a couple weeks left that gold has to push higher if it's going to be similar to what happened during the last time the economy slowed and the financial crisis kind of started to pick up speed with kind of weak economic data.
Well, this has been a great discussion, and we're going through some crazy times right now, but I always think it's important to be looking ahead and have something to look forward to. And we got the Kentucky Derby coming up. I always love watching that. We got Cinco de Mayo. I love celebrating that. And so I want to thank you very much for spending time with us today, sharing your thoughts on where you think the markets are going. And if somebody would like to learn more about you and your services, where can they go, Chris?
Yeah, they can go to thetechnicaltraders.com, which is my website, or on YouTube, The Technical Traders, and they can follow some of my video analysis there. And that's the best way to get a feel for what I do.
Chris, once again, thank you.
Always a pleasure. Take care, James.